But before we take a closer look at Harmony Gold and Northern Platinum's results, we've got another resources expert. He's in town from abroad. Jeffrey Christian is the Managing Director and owner of CPM Group. Jeff, nice to have you here. You've been talking to clients, telling them good or bad news?
Well, I think we're pretty good news. I mean, you know, we had suggested that the gold price would be sort of flat in the second and third quarters with the possibility of a significant increase starting to emerge in September, October. We're seeing all of the market metrics point in that direction. So we think that, you know, gold's $1,350 today. Wouldn't be surprised to see it $1,380, $1,400 by the end of the year. I think that's pretty good news. It's definitely probably above the consensus forecast. And with platinum and palladium also, you know, we think now that the strike's behind us, we've seen some dusting off. We've seen what we think is the end of stale bull liquidation in both markets. You're starting to see investors start to re-examine the long-term prospects for those metals.
Platinum is one that we're very confused about here, because we've had a 5-month strike of a big chunk of production being taken out, yet the metal's price did very little.
Well, I think it's a combination of things. First off, if you want to look at the metals price, go back to 2012, 2013. And really, starting in late 2011, you saw stale bull liquidation. You had investors who had bought several million ounces of platinum in the period 2000 to 2011. And then they started selling. In 2012, they'd sell every time it got to 1700. In 2013, they were just selling. And that pushed the price down very low going into the strike. Once we got into the first half of this year, you had the biggest strike. You have all the structural problems facing the platinum producers behind the strike. You know, once you get this settled, now you have the real problems to deal with. You have increased tension between Russia and the United States, with the Ukraine stuck in between and Western Europe stuck in between. And you have higher demand for automobiles in Europe and India, both of which are now half diesel. So you had a lot of positives, and the price was flatlining. The price was flatlining because Amplats was telling people, don't worry, we have so much platinum, we can keep the price from rising. And you had that stale bull liquidation continuing from those long-term investors. Other investors said, if you can't see prices rising in this environment, what happens when the strike settles? So I'm going to sell. If, and the most likely thing is, strike settles, the price comes down, I reposition at a lower price, I've capitalized some of my gains. Second most likely scenario, the price doesn't spike down, I reposition at the same price or close to it. And highly unlikely the price rises on a strike settlement. So the strike settles, we saw about a $30 drop over about 2 days, and that was it. And now people are rebuying, re-entering the market on the long side.
So overall, has confidence been restored?
Overall confidence
in the local mining arena here in South Africa?
No, I think one of the things that platinum and palladium have going for them as metals is that large-scale institutional and high-net-worth individual investors who normally would invest in the large South African mines look at the management and the performance and the structural problems that the managements are facing, and they're saying that makes it even more compelling argument to get into the metals itself.
Jeff, we've had at least one of our highly rated fund managers saying that platinum stocks are at a once-in-a-generational buying opportunity. Do you think he's smoking something?
Well, it's hard to say, and I think that there are some very attractive platinum mining stocks here. As you know, we follow the metals and not the stocks. I think there's some very well-managed platinum mining companies here, and there's some very interesting emerging production there. But I think that some of the larger companies continue to have problems. They continue to struggle with major restructuring that they need to do. And there's a little dichotomy there. They say that the platinum market is very bullish, and then they say they want to divest some of their properties. You know,
well, if you had the labor problems that some of those mines have had, you might be thinking the same way. But from a platinum price perspective, everything that you've told us so far would suggest that our fund manager, Piet Viljoen, is on the right horse if the platinum price reacts the way you think it's going to.
Yeah, and we're not looking to see the platinum price run away. I think the consensus down here, platinum is going to go to, you know, $1,600 or so in short order. Our expectation is that it's going to take longer to get there because you do have these overhanging stocks still in the market, and you have some other issues that are coming along. I think you'll see a hiccup with the European data today. You're going to see investors internationally sort of reconsider the whole issue of diesel vehicles in Europe using more platinum, at least on a cyclical basis. So you could see a longer, slower price appreciation, at least initially, in platinum. And palladium, I think, keeps plugging along.
Jeff, unfortunately, we have to leave it there, but thank you so much for your time. That was Jeffrey Christian there joining us, discussing the current metals in